Certainly, I think the tech story is one of high growth, and that's probably going to be with us for a number of years to come. And the fact that we have a weak dollar and lots of fund inflows into Asia and well into this sector and actually more broadly, because you're actually seeing more interest in the financials, banks and brokers and whatnot. So it's actually spreading beyond just tech. And I think the weaker dollar is definitely helping there.
How low do you reckon this dollar goes? Because yes, we're tracking a bit of a stabilization after last week, but really many are somewhat divided over whether or not this is a trend that continues for quite some time.
Yeah, actually, our view on the dollar, if you're looking at it from like 2 to 3 year type of time frame, we think it'll still go down. We'll still weaken. We're probably just somewhere between 1/2 and 2/3 way through this weakness. I'll be looking. You show the dollar index there. I'll be looking for that to be approaching 80 before we get to the bottom of this cycle. However, when you look at the very near term, like the next few months or so, I think we probably could see some catalysts for a little bit of a counter trend rebound. The first of which is probably expectations for the Fed, which is, the market is at about 2.5 hikes this year. We probably have more upside there. The second is protectionism is, inherently dollar bullish because it weakens whoever's exporting. And thirdly, it's oil, right? We think that there's probably some supply and seasonal risks coming to the oil market, and that probably would dampen risk sentiment a little bit, even though it does not. In our mind, it doesn't really change the overall positive tone. So the near-term risks are there because we've had a very strong positioning in the past couple of months.